treasure gold.
Hello, everybody. So nice to be here again at Blockchain Jungle. I'm gonna take a thermometer on the room, and I would like to know who is a founder. Who is a founder here? Okay, we have several founders. Who is an investor? Who is an investor here? We also have some investors. Great. So today, I am going to talk about my journey on how I ended up in 5 years with over 70 over 70 angel investments. So this is my portfolio. I'm missing a few. I'm missing Consensus, the makers of MetaMask, and a few other ones, but it's quite my portfolio that I built in 5 years. I started doing this during the pandemic. I was bored at home. I couldn't go to the gym. I bought a rowing machine. It was noisy. I started listening to podcasts, and I found some very interesting podcasts on investing. So I started testing the waters. I have been very lucky because in angel investment, luck is a very important factor. So I have been able to get into one of the most difficult private companies as an angel, SpaceX, 500 billion in valuation right now. I also got into OpenAI, Sam Altman. Actually, I'm very excited also because I'm, in a way, I'm partner of the World Project, which is also part of the Sam Altman vision. World, we are creating a proof of humanity. We are sponsors here today. We have several locations here. You can create, not human, everything started through these fantastic companies. I'm going to tell you about my first lesson when I started this journey. Lesson number one is focus on specific segments. It is very difficult to make the right investing decisions if you don't have sensitivity in your segment. So initially, my portfolio looked something like this. I was all over the place. I have no idea on orthodontics. I got into Moons, great company. I'm not a dentist. I'm not in the industry. I had no idea. I just got excited. And I was actually quite excited about any shiny little thing that I was presented as an angel investor. So slowly, I started focusing on areas that I really liked. So from a portfolio like this to a portfolio like this. So this year, we did 2 IPOs, one with Circle. Right now, it's probably at 40 billion in NASDAQ. So we're very excited about that. Also, we did CoreWeave this year, NASDAQ. While you specialize in market, so while you specialize in a segment, you will really start understanding what is a good investment. So you will be able to compare valuations, founders, geographies, etc. So first lesson is focus on a segment. After I started doing this, the second lesson is focus on geographies. Initially, I invested in a company from Chile, invested in a company from Israel, Mexico, from US. I was all over the place. But slowly, I started finding that specializing in a region also gives you understanding on how to value companies. Because it's very different how you value a company from Omaha than Silicon Valley or Israel or Malaysia. So focusing on regions is also very important. Now, there are founders here in the audience. It is very important for you founders to speak the language of angel investors or VCs. When you present your pitch, make sure you understand this and make sure that it's clear for your audience. And let's go back to the other lesson. Well, the lesson number one, which is the segment, exactly what is your segment, what is your geography. There are investors that specialize in emerging markets. There are investors that may specialize in Central America, for example, or investors specializing in Silicon Valley. So make it clear for your investors, founders in the audience. Then the third lesson, well, this is a map of how I was doing initially, like all over the place. Now I have a very clear investment thesis that I have been developing over the years. So now there is nothing like this. Before I was just all over the place. And the third lesson is what type of rounds you invest. A quick recap is we have pre-seed. Pre-seed is pretty much when you have an idea, you're putting together your team, there is no sales, there is no revenue, there is probably not even offices, but you are putting together a team. You have a great idea and you want to do this. So pre-seed, that's pre-seed. Then we go to seed. In seed, it's when you are actually doing something. The team is now sitting down, they are working hard, and you might have $5,000, $10,000 in monthly revenue. That's fine, but you are doing something. And then we go to Series A. Probably on Series A, you are probably selling $1 million already. You are getting some market fit, you are getting traction from your customers, from segments, your markets, etc. And then we get Series B, Series C, D, etc. So this also depends on what type of returns you are expecting. You are looking on raising funds for a pre-seed or seed. Investors are typically looking for 100x returns. So that when I have been a judge in startup competitions and the Costa Rican Shark Tank at one point, etc. And what I find from founders very often is that they don't show me the path of 100x. Raising money, sometimes they don't even know exactly which round they are raising. I want to make sure that if I sit down with someone for 5 minutes, I understand how I'm going to make 100x my money. Not double my money, not 10 times my money, 100x. Can you articulate how I'm going to make 100x my money? And then if you can, then there is some interest. Doesn't mean that I will invest in the company, but there is an interest. So if I'm on Series B, C, for example, the deal I did with CoreWeave or Circle, of course I'm not expecting 100x. Typically pre-IPO, it's 2x, 3x. I was very lucky with the last two I did with IPOs. We did about 8x, 10x. For pre-IPO, that's really, really good. But it's important to understand what type of round you are investing. Me personally, I like to invest in seed and Series A. Pre-seed, some investors love pre-seed. I typically don't invest in pre-seed because I don't really know if the team will actually start doing something. Sometimes ideas stay in ideas. I don't like to take that risk. And also, when I start investing in companies, I also want to make sure that founders are fully devoted to the project. I personally don't like to invest in part-time founders. I want to see them all in 15 hours a day, right? That's what I like. Then the lesson number 4 that I want to tell you today is the profile of your founders. That's actually very important, and you need to get to know your founders. So one of the things that I like to know is from where the founder is coming from. Founder coming from orthodontics and now he's building something on blockchain. I don't know. But if he is doing something on blockchain for dentists and he's bringing together the right team, okay, that's something different. So in another company, the one that takes my day-to-day, we built a franchise management system called FranFast, franfast.io. I have no idea on technology. I'm not a developer. I don't read code. But I built software that is now used by over 30,000 franchises. So I had the franchising experience, no technology experience at all. But I put together the right team. Those are the type of founders that are also very valuable because they really understand the pains in their industries. So something else is someone has to know how to sell in the team. You might have an incredible tech team, you're building on AI, on blockchain, on etc. There is no one that can actually be in front of someone, make a pitch, and sell, that's going to be difficult to grow. So who is going to be selling from your team? It is good if you have 2 or 3 founders, not one founder with 2 or 3 employees, because sometimes employees, they might leave. They might not be as committed as the founder, but 2, 3 founders, great. And by the way, a very curious fact, who knew that at Apple there were 3 co-founders? Ronald Wayne sold his stake for $800 at Apple. 3 founders at Apple, eh? I wanted to bring you that interesting fact. $800 for double-digit percentage of stake he had at Apple. You guys founded Apple. So the next one is I like to invest in founders that have made exits in the past. One of the investments I did about 2 or 3 years ago was from a guy that built a company that would finance cars. He sold it for one of the big banks for like $800 million. And now he's doing something for financing first homes. Sure, I'm going to invest with that guy. He already had an exit for $800 million, and he's still in the same type of market, but instead of cars, it's now houses. For sure, I go with that guy. So I really like to see if founders have done exit. Of course, you need to have your first exit. So otherwise, you need to start from somewhere. So if you have a great idea, a great team, and remember, 2, 3 founders, try to get one of those founders with a previous exit. It's going to help you a lot, right? Because someone already went through this process. Someone is going to be able to understand what to expect during this interesting process of building a startup, building perhaps the next. Then the other is make sure you have a great CIO in your team. Someone really needs to understand how to leverage technology for the use of your company, not for the product you are building. Of course, the CIO will also help you with technology, inside on blockchain, etc., whatever you are building. But you need to leverage technology inside your company. You need to be able to do a lot more with AI, for example. Then the time commitment, I spoke a little bit about this before. We have 2, 3 co-founders, but they all 3 have full-time jobs somewhere, or probably only one is full-time in the investment, in the startup. I'm not sure, man. They might just say, I need a better, I got a promotion. Bye, right? So I really want to make sure that the founders are committing. I'm not committed 9 to 5, but committed like 15 hours a day. That's what I like to see, right? Not everybody's looking for the same things. I'm telling you my investment thesis. Then some of the founders, some of the investors specialize in specific segments of type of founders, like women. Some investors like to invest in women-led businesses. Fantastic. Some in minorities. When I was doing the Shark Tank type of program here, and the winner was a company in the tourism area working with indigenous people in the south of Costa Rica. That was fantastic, a beautiful project. We decided to award the prize for that Shark Tank type of program that we did with Repretel, with the local TV station. And so those are some of the lessons that I'm going to tell you. And I'm going to go back to this one, the 100x. Sometimes you're looking to build a product and you self-limit because of the market you are focusing or because of the application you are focusing. For example, you might be thinking, okay, I'm going to build this appointment setting system with AI agents for doctors. Okay, great. Why only doctors? Well, because I know doctors very well. But probably real estate agents would go across borders, would go across Latin America, would go around the world. So why just looking at one segment in Costa Rica as an example? Find the path for 100x. Find the path for 100x. And finally, I'm all set. The message that I'm going to leave you today before I say goodbye for the day is if you are a founder, remember to speak the language of the investor. And recently I was at a competition as a judge and advisor, And I was listening to all the pitches. And some of the founders were saying, well, I'm raising $500,000. What's your pre-money valuation? What's your post-money valuation? I'm like, $100,000. They have no idea about what pre-post meant. Sometimes they wouldn't even tell you the percentage of $500,000 would signify in the investment. So really understand what investors need to understand from your business. Speak the language of investors. And investors, the message that I would like to leave you today is specialize. Specialize in segments, regions, rounds, type of founders, and enjoy it. Great ride. It's not for 1 year, 2 years. When I invest, I typically invest with a time horizon of 5 to 10 years. Of course, sometimes we have liquidity events in 1.5 or 2 years. One interesting company I invested is US Bitcoin Corporation, Bitcoin mining company from the US. And then they decided to merge with Hut 8, public company in Toronto Stock Exchange. And it became just Hut 8. And all of a sudden, these guys bought 80% stake in American Bitcoin Corporation led by Eric Trump. So I ended up being a partner with Eric Trump, the son of Donald Trump. And that became a liquidity event because all of a sudden we were in this Toronto Stock Exchange. So, okay, fine. It was like, I don't know, 1.5 years horizon to get to a liquidity event. But I don't count on that. If you're an angel investor, if you want to start in angel investment, just count that it's going to be 5 to 10 years. You're going to be a lot happier if you don't expect to get your money back in a year. And if you are a founder, well, set expectations right since the beginning. It is very difficult to return investors' monies in a year, in 2 years. It is very difficult. And understand what type of investors you are going to get since the beginning. Because there are some investors that are very demanding. So get to know your investors. Investors get to know your founders and find the right path and set expectations not only on paper, but also at the end of the day, we're people, right? We need to align expectations. And with this, I wish you all a great journey in angel investing. And founders, remember to speak the language of investors. Enjoy the rest of the event.
My sorrow into treasure gold.